So we'll be talking today about Power Active, which is probably going to be a new topic for many of you listening along. Joining us, or joining me on the call today, rather, I should say, we've got Nick and Stephen. Nick Mercure, based in SA, is one of our corporate energy specialists. G'day, Nick. How you doing?
Morning, Emmett. How are you? Pleasure to be here. Yeah. Hey, Stephen.
Morning.
Hey, guys. Yeah, so Nick's been with us for many years and up to 10 years experience in the energy industry, works specifically with corporate energy users. And Stephen, one of our client solutions managers. Stephen, you work with our existing customers on delivering similar solutions to Power Active.
Yeah, that's right.
Thanks for joining us today, guys. So kicking off, I suppose, the agenda that we'll be covering today, obviously, is what is Power Active? The terminology you see there, the price efficiency and the active option are, I suppose, the really key elements of Power Active that we'd like to discuss. They're unique to the Flow Power offering and really do set us aside from our competitors in the electricity market. We'll also be talking about, I suppose, Nick, as you can probably say, one of the most important things about electricity contracts, knowing when to contract. It's a really key consideration for businesses, right?
Absolutely. If you get the timing wrong, it can cost your business significant amounts of money. Absolutely.
Yeah, and there are solutions to manage that, and we'll go through that as we cover off today. And lastly, Stephen, having worked with some of our largest customers, we're talking through some real life examples of how Power Active's worked and the active option particularly as well.
Yeah, that's right. Some good news stories to share, and I guess hopefully some learnings everyone can take away.
Yeah, particularly in the current energy market, it's been really interesting over the last year or two. We've seen some very structural price changes in the national electricity market, and that's meant there's been some really good opportunity for businesses to save.
Yeah. Look, I think if you've approached it with uncertainty, it's probably been a time of anxiety, but hopefully at the end of this, you'll feel a bit more confident about it all.
Yeah, awesome. So Nick, I'll hand to you, mate, to talk about Power Active, and I suppose key areas being price efficiency adjustment.
Fantastic, thanks, Emmett, and welcome everyone that's joined in today. So I guess Power Active essentially is a solution very similar to a traditional commercial and industrial electricity contract. It has all the same key elements, but in a purely transparent manner. So probably the best way to help everyone understand how it works is to go right back to the basics and just sort of explain that all retailers who sell electricity to customers have to purchase the electricity they sell from the wholesale market. And there's a wholesale market for each state across the national electricity market. And they all operate independently, and they're driven by supply and demand within that market and managed by the Australian electricity market operator. So the reality is that retailers have a risk from a customer's individual load shape and the time of which they consume their electricity. In order to manage that within the peak and off-peak prices that they provide to their customer in a fixed retail contract, there's what's called a fixed risk premium that helps protect the retailer.
Yeah, so I guess looking at this graph here, businesses are probably used to paying this kind of price, peak and then off-peak. And I suppose the retailer that's pricing them takes a view on when that client's using energy, and then that's how they derive their peak and off-peak prices, right?
Absolutely. So that's exactly right, Emmett. That graph there on the left. So the black line is just sort of indicating what a traditional fixed retail tariff looks like. So it's off peak, 7 a.m. in the morning, jumps up to peak, and continues through to 9 p.m. in SA or 10 p.m. in the eastern states, and then it steps back off to off peak again. Now, this was a methodology that was developed just over 20 years ago. At the time, it was a really good, I guess, price indicator to customers to encourage consumer behaviour. Just sort of saying that the peak of the demand was during those times, and the generation type that was used predominantly for baseload generation then was predominantly coal, which is sort of not easy to move. It's not very flexible. So it was a really good model, and it was a good way to encourage customers to move their load away from the peak time to reduce the pressure on the network and the generators. The reality is that it doesn't really look like that now, and the orange line that you can see there is the daily average wholesale price, which is driven entirely by supply and demand. This is across the national electricity market averaged out. And you'll see in South Australia and Victoria, particularly South Australia, the middle of the day sort of midday there is actually much lower on average than some of the other states across the national electricity market. But I guess it's important to understand that what the retailer pays is the orange line, and what they charge you as a consumer is the black line. And for most customers, you'll see there's a pretty big delta between those two.
Yeah, delta being different. And I guess that the reason we've got this carve out happening here is probably driven by mostly the renewable energy in the grid, right?
Absolutely. I mean, you'll see that the average daytime price, so between sort of 10 a.m. and 3 or 4 p.m. has dropped considerably across the NEM and you know, exponentially in South Australia and becoming far more prominent in Victoria as well. The average price in South Australia in Q1 between 10 a.m. and 3 p.m. was negative 1.2 cents per kilowatt hour, which is extraordinary. So I guess it's important to sort of talk about how Flow Power structure their price or their power active product. So we go to the ASX energy market. Now this is an open information website. Anyone can go to the ASX energy website. Emmett's highlighting it there with the cursor in the bottom right-hand corner of the slide there. This is a really good place for anyone who wants to understand more about how their energy costs are derived, particularly the retail component. So for our power active product, we go to the ASX, we look at the annual volume that your business is going to use, and we secure you a price from what's called the futures market, and this sets the baseline for what you're going to be charged. We then use something called price efficiency adjustment. Sounds a bit scary, it's really not. The reality is we have to buy, like all retailers, from the wholesale market. So what we do is we take each month, we look at each month on its own, and at the end of the month, we look at every interval that you've consumed, the time of which you've consumed, and the volume, and we work out what your average wholesale price for that month would have been in a cent per kilowatt hour rate for you as an individual business. We then compare that to the wholesale average for the whole month, and we simply subtract your load weighted average price from the market average price, and that gives us a cent per kilowatt value of either positive or negative, and we apply that as the price efficiency adjustment. We then apply our fixed retail margin, and that gives you your net rate, which will vary slightly month on month, depending how your load shape has performed against the market.
Yeah, Stephen, and I guess maybe a question for you. Customers that we've got would be sort of used to this as peak and off peak, but this is kind of a true representation of peak and off peak because you're looking at the true peaks of the market.
Yeah, that's right. And look, I guess exactly the mechanism Nick has described, it gives them a true price for them as well. So they're not just being given inherently sort of a standard profile of tiered pricing. It's what they've actually used. And as you can see from the table, some months that's pretty significant savings.
Yeah, that's right.
Yeah, so that the table on the right there is actually from a South Australian customer. They're a heavy industrial manufacturer. They're a smaller scale heavy industrial manufacturer. They're less than 1 gig in load, but their natural load shape, so no changing to the way they operate their business, actually lends really well to the power active product because they're avoiding the evening peak, and the bulk of their volume of electricity is consumed during the day when renewables are really driving down the wholesale price of electricity. And you can see through this chart here that they're getting some exceptional outcomes. I mean, you look at March and they're paying a rate of 2.12 cents per kilowatt hour. Now that's a flat rate, not peak, not off peak. And I can assure you that average of 4.9 cents per kilowatt hour for the 12 months is well below the off peak rate they were paying prior to coming across the Flow Power.
Yeah, that's right. I suppose so. I guess the next part of Power Active, Nick, is the active option, which we alluded to earlier. Moving on to the next slide, Stephen, if you want to take this about what the Power Active option is.
No worries. Well, good morning, everyone. As Nick mentioned, so there's a base rate that comes from the market. What the active option is, it's an additional add-in to your base rate. So it has an additional cost in cents per kilowatt hour. It's quite small. What it means is if the underlying market were to fall, as you can see from that graphic there on the screen, you're able to adjust your base rate down. So as an example, if the base rate that Nick had in that previous example was 4.49 and there's a reduction in the market to say 3.49, you're able to move down that entire cent. So your base rate from which the PA is being applied and the margin is now 3.49 instead of 4.49. So it doesn't change anything around the structure of your contract. Your contract with Flow Power still runs for 3 years, 2 years, 1 year. But what you've done is you've just picked up that saving in the middle of the life of the contract or at the beginning. We have an example for you later, which is actually one of my clients that I'll walk you through. But what this sort of removes for you is any of the anxiety of, do we go to market every year for fear of being locked in at high prices for a longer period of time than we need to? Or if we lock ourselves in for a longer period of time, because typically going longer means better rates and lower margins, do we then miss out if the market falls? And look, the reality is under normal circumstances, probably. It depends on the structure of your contract with your current retailer. In Power Active, this option, which like I mentioned, does have an additional smaller cost per kilowatt hour, means that you're able to follow the market down. So any of the benefits that are passed through, much like the PA is a benefit passed to you, so you know transparently how it's constructed, you're able to benefit from that variation. The active option means if the market moves in your favor, you draw the benefit. And of course, if there's an increase in the underlying market, realistically, you don't care because your base rates are contracted and set from the time you start. So good news, it only moves down.
That's right. And Nick, I'm not sure what your experience is with this, but I've seen certainly with clients that sometimes other retailers would offer an opportunity to reduce your base price, but you have to re-sign another contract. With Flow Power, I mean, there's no requirement to sign a new contract. It's done during the same contract term.
Correct. Yeah, some retailers will offer what's called a blend and extend. So they'll let you take a new contract before your existing contract ends. But the reality is they're losing margin when they do that. So that margin will be spread out across the new contract term. So you're not getting quite as much value as you really should be getting from recontracting. So the active option means that you don't change anything in your existing contract. It just means that if the market falls, your base rate will follow the market down, which is a fantastic outcome. And outside of the initial incremental cent per kilowatt hour cost, there's no additional charge from Flow Power to apply that. Our margins are fixed. So the reality is the best base price we can give you is the best outcome for everyone.
Yeah, exactly. I mean, it's a good point you've made there. Our retail margins are fixed and all our clients know what they are. So if we can improve those base rates for customers, it means, you know, good outcomes, stickier customers, and everyone wins. So really good flag there. Awesome. So I think this is a really good opportunity to sort of illustrate on a graph how different contracting methods do work for businesses out there. Business as usual, which most people would be aware of, is going to market for a fixed price. As we've discussed, you sign at a particular point in time and you get that price for as long as your contract lasts for. So in this example, we're looking at the electricity price over almost 2 years thereabouts. And as you can see, it does vary wildly from, you know, up to around 9 cents a kilowatt hour all the way down to sort of 7.5 cents a kilowatt hour. So, you know, that's some 20% difference from year to year. So if you are buying your contract under a standard traditional, what we'd sometimes call vanilla process, you sign today or you sign here, you get the price for as long as the contract lasts for. Same if you signed here, you've actually timed it a little bit better, but, you know, maybe by complete luck, or maybe it was some advice you got, but anyway, you're stuck at that price for the entire contract term. The other alternative you can look at is what we refer to as progressive purchasing. It's not as common as fixed price standard contracts, but it is available out there. What that means is you actually take small bites, maybe if you want to call it that way, across different time periods. So instead of buying all your electricity at once, you're buying, say, 25% of it in 4 different blocks. And what you end up getting as a consumer is the average of those 4, or the weighted average, I should say, of those 4 different time periods. So you are spreading your timing risk, as we've said earlier, but ultimately, once the price is set, the price is set. The last option, which we've gone through today, is the active option, or an option which Power Active has as part of it. So what that means, as we've discussed, is if you were to buy your electricity contract here, you know that that's the ceiling of the price you'll pay. It'll never go above that. However, in this circumstance, as we can see, the market trended up, which we were protected against, but then it's actually come down quite considerably to, you know, if we look to where this point is here, we're looking at, you know, a pretty big drop from where the contract was initially signed. The active option allows you to fall with the market and re-secure that price at that point in time. And then instead of paying along here, the client is now paying along here. So Nick, I mean, if we think about recent events during COVID, we saw prices fall off a cliff, and the active option meant that people could take advantage of those drops, right?
Extraordinary. You know, we were looking at sort of 5-7 year lows in the market, and just like COVID, I don't think anyone had a crystal ball to predict that happening. So the active option really does give you the opportunity to protect yourself against, you know, the unforeseen realities of life. So it's a fantastic solution.
Yep. So Stephen, handing over to you again. This is an example of one of your customers you manage.
Yeah, that's right. So this is a customer who joined us actually at the start of 2020. They're a small manufacturer in Victoria. As you can see from the table, what the active option did for them, they picked it up at the beginning. They had never contracted with us before and they'd never used an option before. So the progressive purchasing that Emmett mentioned meant that they had taken a price for 22 and a price for 21. When the market fell off a cliff vis-a-vis COVID, we were able to exercise the option for them. And as you can see, their base rate for 2021 moved from 4.49 cents down to 3.56, which is a massive fall down. And what that means is their immediate base rate that they know, or that ceiling, has now gone down to 3.56 cents, which is sensational. A business like theirs, they were, I suppose, a little bit unsure of how it would work and what it would look like for them. So really good outcome from the beginning, and the same for 2022 as well. If we were looking, I guess, across all of our customers, the entire kind of book of business that FlowPower have, our range of savings was anywhere from 5% up to 30% for the customers who picked up the option. And what dictates that is time. So the main thing with the active option, we've sort of talked about it indirectly, is timing risk. So that the two strategies I referred to before, where you go long and you think, oh, we're locked in, or you go year to year, both of those are sort of effectively concerned over the opportunity cost of time. And so the active option does away with all of that. So if you're someone who's used to contracting every year because you don't want to be locked into something for fear of a bad outcome, well, the active option can remove that for you. And as Emmett and I referred to at the beginning, the kind of uncertainty in the market is a lot of talk in this scenario for you, because the reality is if prices go up, as you saw from the previous chart, it's really of no consequence for you. Your base rate is set. If the prices go down, that is a very different story. And there's a version of someone like myself. You get an account manager assigned to you with your Power Active contract, and that person will manage this process for you. And in this example, we exercise the option and we'll let you know what the saving is.
Yeah. And yeah, Nick, sorry, I was just going to say that this is actually a pretty commonly employed approach to electricity contracting by retailers, but not often would you get it as a customer.
Correct. Yeah. So most of the major retailers will have a pretty heavy hedge book with lots of overlapping hedges. They'll probably take an option on around 30% of those hedges. Now, the reality is if there's an opportunity for them to execute the option and deliver some savings, those savings will go through to the shareholders of that business, and they won't come through to the customer. Everything that's in the Power Active solution is something that all retailers do, and it's something that's factored into all fixed retail contracts. We're just being really transparent about it and giving our customers the opportunity to extract additional value from the same methodologies.
Yeah, that's right. And I guess going back to the fact that we charge that transparent retail margin, if we can improve the price for our customers in any way, our margin remains the same, and we end up with a stickier customer book. So.
Absolutely. And just to touch on what Stephen mentioned earlier, really, really important point about the fact that all FlowPower customers get a dedicated account manager. Anyone that's under 5 gig in load is probably unlikely to have experienced having a dedicated account manager. And certainly anyone under a gig, I'm not aware of any retailers that provide any level of account management for below 1 gig. FlowPower, every customer, 160 megawatt hours, doesn't matter. If you're with us, you get a dedicated account manager, and that's a pretty important point to note.
Yeah, that's absolutely correct. Great. So I suppose for those listening, thinking, what can I do now after finding out this information? We'd really suggest checking your electricity invoice. See if you're still getting charged peak and off-peak prices, because chances are you probably are. And I think you should probably think to yourself, is that the best fit for my business? Nick, the example that you gave earlier, who the manufacturer in SA who came across to us, did they come from a peak and off-peak pricing model?
Absolutely, yeah. They've been doing that for years, and their view was that because they'd been doing it for a long time, it was the right solution. It was the best way to go. It was what they knew and what they were comfortable with. So yeah, they were intrigued early on by what we could offer, and through a lot of research, they came to the conclusion that it was the right solution for them.
Yeah. And yeah, going back to, I guess, the option, you should definitely check if your contract has an option available as part of it. It may have the flexibility, you might not be aware of it. There have been some pretty big structural changes in electricity prices in the past sort of 12 to 18 months. And you should be checking with your current retailer if you can benefit from that. Lastly, as well, when does your contract expire? You should be checking when that expires, and then check the ASX energy prices that are available for you after that expiration. As Nick said, anyone can access the ASX Energy website. It's free. You can check there. You can see what the real-time prices are. And if those prices look attractive to you, they are available through products much like Power Active.
One thing, sorry, I think we might just, if I can just interject on, is when you're looking at your contract expiry, you don't actually need to wait for your current contract to expire to pick up a new one. So in the client example that I gave before, they joined us in 2020. They were probably atypical in the sense that they were able to benefit so quickly because of the underlying market. What we encourage all of our customers to do as best practice is to go long, which means if your contract expires at the end of this year or even the end of next calendar year, so December 2022, you can still look at prices in the market and actually pick something up now. Obviously, you don't begin paying for it, but that's typically what produces the best value. So look at the end of the expiry, but also look to see, well, what is the price in January of 2024? And then from there, you're able to have a look and build out a strategy that way.
Yeah, you're right. And I suppose the really key element to that is the active option, because if you're buying that electricity contract 4 years in advance without the option, you may not. Yeah, you might be a bit scared to do that because the market can change a lot between now and 2024. But if you're taking the option on that contract, you know that, okay, I'm securing my ceiling today, and that's the worst case scenario. What's potentially more likely to occur is prices change or the prices come off during that contract term, and then you can resecure. So really good flag. Thanks, Stephen.
Absolutely.
Really good point, Stephen. And I think considering where the market is right now, for a lot of customers, a forward contract's probably a really, really ideal option. And to do it through Power Active with the active option, perfect outcome.
Awesome. Now, I did just realize I forgot to mention that we can all put our questions in the chat at the start of the webinar. So hopefully everyone sort of got that gist and popped in a couple of questions. We are going to open up to the floor now. And we have got a couple come through. Fantastic. So people got the implication there. We've had one come through from Simon. He's asked, let me just read it. Who decides when the active option kicks in, and do I have to monitor anything? Yeah, really good question, Simon. Nick, I might hand that one to you.
Yeah, absolutely. That's managed entirely by FlowPower. You don't need to monitor the market. You don't need to be jumping on the ASX website every week to see whether now's a good time to execute the option. That gets managed by a combination of our trading desk and your account manager, and they'll work together to ensure that gets executed at the optimal time for you.
Yeah, and Stephen, you would have worked with customers on executing strategies in the past sort of 12 months, right?
Yeah, it's always a happy call. No, never any unhappiness in that one.
Fantastic.
It's a very simple process, Simon.
Yeah, that's right. We've had another question come through from Gail. Gail has asked, can you have multiple NMIs on the one contract? Stephen, I'll pass it to you.
Yes, definitely. So, Gail, what we would want to see is where your NMIs were located. We do have some restrictions that we've kind of referred to at the beginning in terms of this product is designed for the CNI customers. So there are different thresholds in each state. The short answer is yes, of course. And I would say the vast majority of the customers I look after, more than 80%, have at least 2 NMIs. They don't have to be located in the same vicinity or even in the same state. But yeah, short answer, yes. And we would encourage you to do that too, from a savings perspective.
Yeah, the only restrictions that would be imposed on enrolling in multiple NMIs are the electricity they're using. So if some of them are using very, very small volumes of electricity, like if it's an unoccupied shed, for example, there may be certain circumstances that they can't be included. But we find, like you said, Stephen, that 80, 90% plus of client sites can be included on the same contract.
Yep. Good question, Gail. Very good question.
Great. We've got a question come in. I think this might relate to one of your slides, Nick. What does load shape mean from Ahmed?
Okay, thanks, Ahmed. So the reality is load shape is just really, I guess it's the time that you're consuming and the volume, but probably more importantly the time, because the way your load shape interacts with the wholesale market that sits behind your electricity contract can really change the outcome that you're getting. So, for example, a school that consumes most of its electricity during daylight hours is going to actually have quite an attractive load shape, just because most of the energy is being used during the middle of the day, which is when prices are their lowest. So it's just a term that we use to describe when and how much volume of electricity you're consuming.
Yeah, a similar name that I like to use is consumption profile. If you think about the profile of how you use electricity,
Correct.
Load shape, consumption profile are sort of interchangeable in our world. Unfortunately, there are a lot of industry-based terminology we find ourselves using. So thanks for that, Ahmed. Good question. We've got another one here from Peter. He's asked, we are based in central Queensland where we only have ergon as a supplier. Can flow power operate in this area? I might take that one. Yeah, the answer is yes. Queensland's an interesting state where ergon, I'm not sure exactly up till when, but up till maybe a few years ago, was the only supplier that had a monopoly on the electricity distribution as well as retail in that area. To answer your question, Peter, nowadays, energy users do have power of choice, if you will. You can choose your own retailer. Assuming you meet the minimum consumption threshold, which is obviously the only requirement that we said to be with flow power, then we could become your retailer. So I would suggest, yeah, looking at alternatives out there. You might not have been aware that you can move away from ergon, whereas now you can, and it's worth exploring.
Yeah, jump on the website and ask someone to give you a call. That's the best advice.
That's right. I'll give you Nick's number on the next slide. One next question from Yogesh, who has asked, if you were in a contract, can you get new pricing? Nick, I will hand that one to you.
Yeah, I mean, look, the reality is if you're under an existing contract, you've got sort of two options. You can look to take a forward position or a forward contract. And as mentioned earlier, now's probably a really good time to be considering that option. The other option you can look at is exiting the existing agreement. That will come with a termination fee. Different retailers charge that different ways. So yeah, you'd need to reach out to your existing retailer and just confirm what that would be, and I guess on a business case, decide whether or not that's worth doing. But probably the best option right now is probably going to be looking at a forward contract and securing the low rate that's available for 22, 23, 24 now, rather than waiting till the current contract expires.
Yeah, good point. And Stephen, I think you'd probably see that with our existing customers now. Once they've come on board, most of them do particularly, start looking for that new contract period as soon as it's available.
Yeah, exactly. Well, every year, so if you sign up, if you go as long as you can, generally once they start to see the value, they then want to get the next tranche as it becomes available. So every year that it becomes available, they want to contract out, and you basically, in the end, what you end up with is sort of a roll in a way. So they're able to use the option to sort of hedge out some of that timing risk, and they're going long, which means they're usually getting the best price that's available. So kind of create a rolling saving for them across the years.
We've got probably time for one or two more questions. If we go slightly over, apologies, but I'd like to get to the ones that have come through that have been great. So Wayne has asked, if contracted for 3 years and usage halves or doubles, what happens to the price per kilowatt hour? Look, I might take that question myself. It's a really good question, actually, Wayne, because most electricity, in fact, I'd say all, maybe most actually, electricity contracts do have what's called a load flex provision or a consumption flex provision, where typically speaking, if you use over that flex volume or under that flex volume, it can be sort of 20 to 30% typically, then you are potentially up for a penalty. With flow power though, we're very flexible in our contracting, and often we actually will structure the load flex around the customer's needs. So Stephen, I know recently you'd worked with a data center who was starting up for the first time, and they were going to be having very erratic usage over the first year or two. How did you handle that load flex?
Yeah, actually, they're a good example. There's a few. What we would do in that instance, Wayne, is we'd want to look at how you're using energy. In the example of the data center, because we knew they were starting up and they had a testing schedule and a ramp up schedule, what we've done is we basically accounted for a certain allocation of energy across each year. So as Emmett mentioned, there's a load flex provision, which means you can go up or down by a certain percentage. In the data centers case, because we know what it is, we know some months they're not going to be using any power at certain locations, and that's accounted for. So there's no cost or penalty for them. And then once they move up as well, we know that we're testing different ramp ups. So when they dramatically increase their usage, there's also no penalty. So at the end of their contract in year 3, we know they'll be going hammer and tong. So they have a sort of set percentage there, and very early on in the beginning, it depends on location. Sometimes we know they're going to use none, and there's no penalty for that. I suppose we'd want to know, I guess, yeah, it's a good question. Just if you knew you were moving or you were changing something, all of that can be accounted for in the beginning.
Yeah. I suppose the only thing to add to that is that if you do have a very uncertain future about your electricity usage and you want to have more flexibility, we can build it in. But typically, if you would like to have very, very large amounts of flexibility, it might come at a very small premium to pay on your electricity price. So you might pay 0.1 cents a kilowatt hour more, but you've got, say, 100% flex variation. So there's no penalty if you use less or more.
Yep, and the data center do exactly, Emmett. They have that for this year and for the beginning of next year. But of course, once they're up to 100%, then there's no premium attached to that.
Yeah. We have had a couple of other questions come through, but unfortunately we're out of time. So for Craig and for Philip, we will also go back to you after this and send through an answer to those questions. We've got your emails from registering. For everyone online, thank you very much for joining us today. The recording of the session will be made available for everyone, I believe, on our YouTube channel and probably on our website as well. There'll be a link sent across after the webinar concludes. And for anyone who's interested in reaching out, please get in touch with Nick or Stephen. They'll be able to answer any additional questions you may have about Power Active, the option, or even just general electricity market questions. So thanks everyone. Enjoy your day, and thanks Nick and Stephen. Speak to you soon, guys.
Thanks Emmett. Thanks Stephen. Thanks everyone for tuning in.